basis points. Yeah, not too much of changes from when we got pricing yesterday. But when we do look at the chart here, you can see we are right back testing this level at 101.063. 2 days ago, after getting rejected from this 25-day moving average, we had dipped beneath this level. But then yesterday, after opening under it, we're able to close above it. And you can see today we are back testing this level again. So right now, mortgage-backed securities kind of getting sandwiched in between this narrow range here, between this 101.063 level and the 25-day moving average, which can be a tough customer. So this is something we have to watch closely because, hey, if we break beneath this level, well, you could see a pretty big decline, 100 or so basis points until you see the next floor, which is this level here at 100.531, which we tested back on May 18th as well as May 11th. And one other thing that we were watching closely is the stochastics. And you could see, back here, May 19th or so, once we saw that crossover out of this below 20 range, which was oversold territory, and you remember, we were talking about how mortgage bonds were really oversold for quite a long period of time. Once we saw that crossover and we started going up into this range, we thought we'd see some follow through to the upside, which of course we did. But then we hit this big tough customer at the 50-day moving average. You saw the opposite happen. We got into overbought territory pretty quickly, and then you could see that crossover happen. And then you can see what's happened with prices. Now, if this continues to trade sideways here, we might get down pretty quickly into oversold territory. And then once again, we'd be looking for a crossover and some momentum to the upside. But remember, you can remain in these overbought or oversold positions for long periods of time. But right now, at least one positive we have is we are remaining above this support level here. When we take a look at the 10-year, well, it's right back at 3%. And you remember, for 3% is a very important level. We actually, kind of opposite of what we saw with mortgage bonds in that level, they broke above this level yesterday. They got beneath it. And right now we are testing this level. So we have to remain beneath here because if we come substantially above this, well, the next stop, unfortunately, would be 3.25. So we can begin the day here carefully floating. And of course,
so we broke above those ranges and actually had a notice to lock this afternoon. So we're over 3% of that 10-year, and we're just kind of hedging about right. We closed down 14 basis points from when we opened. So as we get closer here, the stock's down 269 points. As we get closer to closing, I'm suggesting we probably should lock for safety.